Good morning, welcome to Jackson's Financial Services. This is Pete Matthew. It's Monday the 1st of February 2010. Last week was an interesting week. We learnt that the UK had managed to claw itself out of recession, one of the last major economies to do so, but only by the skin of our teeth, with the economy growing in the last quarter of 2009 at a pretty paltry 0.1%. That's cutting it fine, I'm sure he'll agree. This figure still has to be clawed over by the eggheads at the Office for National Statistics and could still be revised either up or down. I think that's particularly possible because when you think about some of the measures which the Chancellor introduced to bring forward spending into 2009, things like the VAT, the change in the VAT rate down to 15%, that has now increased back up to 17.5% as of the 1st of January. The scrappage schemes, things like that coming to an end. All these things were meant to help last year, which have now finished, which means that the first quarter of 2010 will also be interesting. It's quite possible, I think, that we could technically dip back into recession again. I don't think we need to worry about that too much. I do believe that the worst of the damage of the recession is over, but we have a very long road yet to travel. Just because we're technically out of recession doesn't mean there aren't still going to be many job losses, and the sheer volume of debt which exists both in households and in corporations is going to take an awful long time to unwind. Over the last 10 days, the FTSE 100, as good a measure as it is of the health of our financial institutions, our financial system really, the FTSE 100 has dropped by 6% over the last 10 days. So should you be worried? Well, I don't think so. The markets have been jittery for quite a while after their major rebound from March 2009 through to about October and November. They've been pretty flat, but it doesn't take much to spook markets. Think back only a few weeks ago to the Dubai debt crisis and how that spooked things, and things soon came back. I believe the FTSE 100, remember it's only an approximate gauge, it's only one of many stock markets around the world, but the FTSE 100 I think is going to range trade between about 5,000 and 5,500 for quite a while yet, at least another quarter and possibly for much of the year, although I hope that the FTSE 100 and markets generally will end the year higher than they started. So the recession is over, kind of. The markets have had a bit of a blip this week. What's best to take from that? Well, I found something interesting in the Telegraph Money section over the last weekend, which began to talk very briefly about timber being the commodity for 2010. And the reason I found that interesting is because 5 years ago I'd never heard of timber as a commodity. But it's only since we began outsourcing our clients' investment management, the day-to-day decisions as to how their money should be invested, that I learned about this from our investment managers of choice, that's 7 Investment Management in London. They've always been masters, I believe, at using many different asset classes to reduce the risk and reduce the cost for their clients' portfolios. And timber has always been a part of what they do. So it's good to hear what used to be specialist coming into the mainstream. So what I think this tells us is that it's as important as it ever has been to diversify, spread your money over many different baskets, so that if one of those baskets suffers, then not that many eggs are going to be broken and your overall portfolio won't suffer too much. But you can take it a step further than that, because investing should never be done in abstract. You should never just invest money for its own sake. You should invest it with a plan and a purpose for what you want to achieve with that money. Now, whether that's a short-term plan or a long-term plan, usually the latter, it gives you some kind of structure so that when the markets do suffer temporarily, you know that you have planned for that, or you've at least accommodated for that in your assumptions going forward. So remember, spread your money around, but don't ever do it for its own sake. Have a plan to work to. And finally, over the last weekend, yesterday in fact, Andy Murray unfortunately crashed out at the final of the Australian Open in straight sets to Roger Federer, so bad luck Andy. Maybe next time, eh? And until next time, thanks for watching. Hope these are beginning to be useful. Thanks very much.